Hello, folks. Welcome to an edition of Market Action. I'm David Russell. Today our guest will be Jeff Yaede from Trader Minute. Kind of interesting. I'm looking around, and it's really hard to have many thoughts or ideas about anything here because it's a really interesting sort of situation we face, more frustrating than anything. We continue to just have this deadlock with Greece. He only print out this thing. It looks like it didn't print out. I need to get my printout. But we continue to have this deadlock with Greece, and the deadline on this is all the way at the end of the month. In fact, I didn't put it on my calendar, but I should. So this could just linger. Now, normally when we go into something like a holiday weekend, like we would, it's possible, still after this. But the thing is, like going into that 4th of July weekend, very often the market will just kind of melt higher. But there's a lot of other things that are out there that can have all kinds of binary effects on the market. So on one hand, we have the Greek thing. But then starting in about a week, we get the normal flood of monthly data, stuff like ADP payrolls, the ISM report, consumer confidence. All those things start kind of piling up a few days out. So right now, we have a market that has everyone's just kind of waiting and holding their breath, and it's really not clear what's coming up next. So I just think that's the scenario we face right here. Now, someone just said that they're having trouble with the echoes. I'm going to try and change that. Let me know if you guys still hear it. I need to work on this headset situation. But the few catalysts today. One is we continue to see confirmation of the recovery in the housing market. Lennar had good earnings. The ITV is one of the stronger areas today. When we look overall at the home builder space, that's really the main thing to the upside. The other thing that's kind of interesting is we're seeing some strength in like the copper miners because Freeport is now spinning off their, if we look, copper miners are the biggest group today. Freeport-McMoRan is spinning off that oil business that they acquired a few years ago. To me, this is not really something to be too excited about. This is kind of like a one-off event. And then we look across, and I think we're seeing a few interesting trends. One of them is that we continue to see weakness in these network security stocks, the companies like the CyberArks and the Data. These were great companies. They're small companies, though, and they all just kind of ran higher. There's this ETF that follows them. But what's interesting is those have been kind of weak. But then if we look, we can see the real strength today in technology comes really from two companies. By the way, we can see that the Russell right now is lagging while the large cap NASDAQ is outperforming. But something interesting, and that's Apple. Apple coming to life today with a big move, coming off that 100-day moving average. And then Facebook continues higher as well. But we're just seeing that overall strength in those kind of big individual tech names that's really kind of standing out. For me right now, I really feel like we just kind of need to have a little bit more clarity one way or the other. If we get a bad situation in Greece, we're looking at interest rates going down. We're looking at financials taking more of a hit. There was a downgrade of some of the big banks, say like Citi and Goldman, were downgraded by, I can't remember which of the big, one of the other big firms. So, at this point, these stocks make a lot of sense if we have clarity on, Greece, because, we're likely to see, I think we're going to probably see more good employment data at the end of, next week. We're probably going to see a decent ISM, and those things are going to push interest rates higher. But at the same time, if we have more, strangeness out of Greece in the meantime, that's going to just be, lingering and hitting us. So I think right now, I hate to do this, but this is in my opinion, one of the worst environments to really initiate any trades and to do much of anything. So I hate to have that kind of outlook, but I think it's where we stand right now. Nonetheless, I do want to look at some of the unusual activity today because there are a few interesting trades. One of them is we saw two things in the airline space. Alaska Air Group. This stock, we have now seen some people coming back to the airline space recently. Alaska Air, is now, it kind of is trying to break back up through this line. And today, the first trade we saw was the August $70 calls bought in ALK. Another one was JetBlue, JBLU. This one had a call roll. JetBlue is just about one of the strongest names in the group. It has the July 20 calls rolled to August 22. So they're looking for the continuation to the upside in this. Those calls to me in August are pretty interesting. We did an alert on this for Inside Options Pro. This stock breaking back. See, this is the thing we like to see. Oops, let me change my line here. But if you look, use flat line that we basically have coming from early June, it's holding that level. And that's something that makes it pretty bullish and to me kind of interesting. This stock has a lot of short interest, and I think this has the ability to probably move to new highs. If you take a look over on Research Lab, if you actually look, you can see that in the airline group, JetBlue has been pretty much one of the stronger ones. JetBlue and Hawaiian have been really the two strongest in the short term. Over most time frames, JetBlue is near the top of the list. So for me, JetBlue and Hawaiian could very well be the strongest places, and the bigger names like the Delta Airlines have been more on the lagging side. If you look at DAL here, this is not breaking above its June highs. Something like American also not breaking above those June highs. Then go back to ALK, it is holding above those June highs. Something like JetBlue holding above, both of these holding above their June highs, early June highs. Hawaiian, not exactly, but still looks a lot better, above the 50-day moving average. So it's interesting that right now in the airline space, we seem to have better, situations in terms of the setups with the smaller companies. All right, let me see. Some of the other unusual activity today. Here's a new company. One of the things I love about Heat Seeker is we find companies that people don't, that you just don't know about. PAH is a specialty chemical stock. Only been public about a year and a half now. They're buying the in-the-money calls. The August $25 calls bought in this stock. That was another one came out early. If you look at this company, it looks like it has this company. There's something about this that has some really interesting growth numbers. When I see a company, with a PEG growth ratio under like 0.5, what this company has, if you look on Yahoo Finance, that's pretty interesting. There's probably something in the future for this company that could be a very interesting catalyst. For me, the one concern would be, I'd rather, really just from my own point of view, if it breaks out to new highs here, this is the sort of thing that could just run. And to me, it's worth waiting $1. But if this kind of goes up and hits a new 52-week high, this could just start moving. So I think that's kind of interesting. But I don't know very much about it. The paper is giving us a clue about it. The overall numbers look kind of interesting, but I'd like to see some more. That is PAH. Tyson Foods, the chicken poultry company. This has been one of the stronger names in the food space. This is the last time we looked at this, we thought it was going to pull back, and it did, but it's now breaking out. They're rolling short calls higher in Tyson. The July 42 calls rolled up to Aug 45. They're just giving this thing more space to run. It's a bullish trade because they're rolling out in time and up and strike, even though it's short calls. Another short calls was an AGCO. AGCO. This has got the August $60 calls sold. This has obviously just been spiking higher. Now they think it's basically running out of gas. Another interesting trade was in Holly Frontiers, an oil refinery, HFC. This has the July $39.50 puts were sold. Down around here they were selling these puts. So, right now the energy space, we're continuing to see weakness in oil, even though the inventories were kind of modest in terms of the inventories went down today. And I'm still looking at oil here, and when you look at this is in a very tight range. I personally am of the belief that I think oil still has some trouble ahead. I think we're going to see too much supply, but nonetheless, it's interesting just to note this incredibly tight range it's in. That I don't think anyone really knows which way it's going to go, but if you really look at this here, this is pretty amazing how tight oil's trading here, and this could have a move coming up in the near term. S&P pushing to new lows as we speak. And so let's take a look at this, because one of the things that's interesting to me is we're still above that 50-day moving average. And to me, it looks like there's a lot of sort of areas over here where people are going to be looking for support. So I think that's kind of interesting that we might be, trying to hold these levels across here and to be watching for that into the afternoon. LifeLock. Now, this is a stock that I own and I've been bullish on. They're buying some puts today in LifeLock with the stock pushing to a new high. They were buying the November 17 puts. This is a company that's moved kind of nicely. It's a small company. It doesn't move very much. But I still think this is a company that has significant upside over the long term. This would be one that I'd be looking to add to if it pulls back a little bit more. But I think this company has a great secular growth story, and it's still relatively new as well. So for me, in all of my stocks out there, I think this is one of the best stocks that a person could buy now for as a long-term sort of thing. And I do own the shares. Okay, let me see if I have some questions. GM had a nice pullback if you're still bullish. Yeah, GM is back to pretty much where I bought the shares. And at this point, I'm just waiting to see. Don't really like this double top at this lower level. I think it's still bullish, but this stock might still just go to the bottom of the range. At this point, it's kind of technically damaged by that downgrade today. It's likely to close back under the 50-day moving average, which is a bad thing from the technical point of view. I like GM, but I think at this point, the short-term momentum in this is pretty ugly. So I want to basically see this stabilize and see that momentum turn higher again. This to me is like one of these stocks that a stock is going to move higher, but sometimes it takes a little more time. And let me actually tell you what one of my mistakes with this one was. Maybe not a mistake because I haven't really lost any money on it, but the thing is, rallies higher and then it stalls. Double top right there. Falling 50-day moving average, but that's the thing, when you have the stocks and the moving averages just don't line up right, you very often are just not going to get the rally right away. So that just kind of shows us that, when you have the momentum first accelerating higher, that's great. But it doesn't last very often when that moving average is coming down like that. So there's bullish paper also in Nuance Communications. We are seeing in Nuance the October 18 calls bought, looking for this to just continue higher. NUAN. Okay, some of the other stuff. Sina is down another 3%, hold or sell. Well, I bought Sina near the lows the other day, and then I set my stop back at my entry, and now I'm out. Ron Inieri, I think, has a bearish trade on this for our Advantage Point service today. So for me, this is just probably best to kind of wait. I think at this point, you got to see what Ron was saying about it. This is actually an example of something where I think I'm increasingly really trying. Almost every time I break this discipline, I lose money, which is when a stock breaks down under all these, these shorter-term moving averages, like on the hourly chart. It just isn't good to fight against that. I've just found that you can be right in 2 to 3 months, but very wrong in 1 to 2 weeks. And, for a lot of us, I'm really not interested in watching something go to a horrible loss and then coming back. For me, I think the lesson from this is something that we didn't really see the confirmation that it's stabilizing. And unfortunately, in this case, I think that if you're bearish following Ron's trade, that's great. But for me, when it was near a low, it was a good risk reward, which is, something like this. That's how I kind of try to look at things. I try and look at it simply from the risk reward. So at this point, I'm not really bearish on it, but Ron would be. And I think at this point, we have to wait and see. I mean, this level now, very often, and here's another mistake I think I might have made on this. Very often, you want to see a pullback to the more recent support. This level from July was probably too high of a support level. This level from April, I'll be honest, it looks like this would have been the place to, it's easy to say this with hindsight, but one of the things I have noticed from time to time is things pull back to that more recent support level. So anyway, that's what I think about Synaptics. Let me take a look at some of the other questions here. Someone says, all right, so you're looking for a stock replacement trade on GM. To me, this is a sort of thing where if the implied volatility is up today, this would make some sense to be selling some of the shorter dated stuff, but I am not really. I don't know. I mean, I'll tell you, when a stock is moving around like this, I don't know if I want to do something like a stock replacement strategy. I don't know if you're going to get very good liquidity in the money. You might get some ugly bid-ask spreads. At this point, my view is it could hold here, but it could also just as easily go down closer to the bottom of this range. Well, it's getting there. Um, but it could still go down closer to that 200-day moving average. Um, so let's see. I'm planning just to hold the shares for now. I have a stop pretty much under these lows, somewhere down around 34. Does Lennar have more upside? Long term, yeah. This absolutely does, I think. But here, once again, look what we have. We have all these moving averages falling. This has basically been pulled out of where it should be. In the near term, I would say no, it does not. I think it will probably at this point come down and kind of hold around this level. That's what I'd be looking for, down around under 50. I think it'll go back under 50. And then you'll have a better opportunity. And then I think it will have has the potential for an explosive rally coming out of that. Okay. Some of the other unusual activity today is in Vanda Pharmaceuticals. This company had some kind of positive news, kind of moving higher. Now, we did not do an alert because the options really had pretty lousy options liquidity. The August $15 calls bought in this name, they were pretty expensive and the bid-ask spreads were wide. So it wasn't really a good thing to do for Inside Options Pro, but you can see this bid-ask spread has narrowed considerably. It will probably not be this wide when you come back tomorrow. That's the one thing I don't like about things like this. And if you look at these bid-asks, you can see that these are pretty ugly as well. They're also selling calls in Deere, DE. This stock is facing some long-term resistance. I think this is actually a pretty interesting company at this point. I think there's a lot of bad news priced into Deere. And I think if Deere basically breaks out, it has the potential to go on a nice run. Everyone thinks that Deere is like in big trouble, and if it suddenly starts to get better, this stock could go on a really nice long-term run. But for now, I think we need to watch against this high, like for example from last May, see if it does break out to new highs. But if we look at this, Deere is now forming a bullish triangle, and it seems to be slowly but surely setting up for a breakout. Is UPS breaking down? Yeah, this stock had the calls and they didn't work. At this point, people are just slamming the transports, and I don't know if it's breaking down or not. It's breaking down out of this range. I don't know if I'm going to say breaking down like it has a lot of downside. I don't think it does have a lot of downside risk. Today the transports are especially weak. I'm not like a pure technician and looks at like a breakdown and says, oh my God, it's going to keep going lower. I believe that you really just look at a lot of the fundamentals and the cyclical things happening. And right now, everything is pointing to a stronger economy in the second half. Does it make sense to be bearish on one of the biggest transportation stocks in the world at a time like that? In my opinion, no, it doesn't make any sense. So I would not be looking for this stock to have considerable downside. I think it's probably going to hold across this range here. So I don't think it has a lot of downside risk. This is just kind of chopping in a range here with the market down and transports weak. I think this stock is going to be kind of trapped between 98 and 102 for a while. This might be several more months of just back and forth. So I think we want to watch this and see. It looks to me like it's going to just kind of go down. I think it's a buy if it gets down closer to 98 at this point in time. Obviously, we saw the call buying in this, but look how it was hit the top of this triangle and then it died. So that's what I think. I think this just remains range bound. Okay. Sanchez Energy. It's a small sort of domestic fracking company. It's been pretty lousy. And they are buying the August $10 puts. Here's another one that's interesting, which is Annaly Capital Management. This company is one of these mortgage real estate investment trusts. This is a very weird company. It has all kinds of odd exposure to things like interest rate swaps and stuff. It trades way cheaper than common sense would dictate. It has a very high dividend yield, and it trades at a very, at a very, you know, cheap price relative to that, which makes me think there's something else going on with this company. One of their problems is they have to, when people refinance mortgages, they have trouble buying new mortgages. I think another problem with Annaly is the fact that the overall size of the mortgage market has been shrinking, which means they have fewer mortgages to buy, which they essentially securitize the mortgages and then give you the dividend from, bundling of the mortgages together. And I think given the overall just shrinkage of the mortgage market, these guys have not done as well. But nonetheless, today they're buying the January 11 calls looking for a gradual recovery in the stock price. So I don't really know what's going on there, but it is interesting to see that activity way out in January looking for upside. It's also interesting when you consider the fact that we have seen paper in names like MBI, which also has exposure to mortgages and gave us a nice move after hitting heat seeker, and those calls doubled or tripled. Now, these are different companies, but it's interesting to see someone looking for upside in NLY. Okay. Well, those are the main things we've been looking at here. And I'll tell you, I just see at this point, I don't see a whole heck of a lot to really delve into. I'd like to talk to Jeff, but I think he might have gotten mixed up in terms of the time. But I will point out a few other things that were popping up to me on Research Lab, and one of those was Realogy. Given the strength we're seeing in the overall housing area, this company owns Century 21 and Remax. Well, maybe not Remax. So these guys are basically the biggest real estate brokerage company in the country. I think they're the only one that's really publicly traded. To me, you now have this stock breaking back above the 50-day moving average. It's been in a very tight range, and all of this happens at a time when I think it's pretty much, I don't want to say undeniable, but it's looking really likely here that this housing market has turned. When you look at all the data that we've seen, the strong numbers from Lennar today, mortgage applications actually rose even with rates moving higher, and now you have a stock like this, which is like the only way to play it, which is still, hasn't really done anything, and it's just now getting above that 50-day. This is the sort of company, it's pretty expensive, but this is the sort of company that to a certain extent it doesn't really matter, because it will be the only way to really play, to clearly play the space. You have Zillow a little bit as well. It's not quite the same thing. Zillow's been working higher. I view them as kind of complementary. But nonetheless, I think Realogy is an interesting stock to look at here and, has the potential to be breaking out. It's forming this triangle, but this could be a stock that we look back on in a year and we wonder, why didn't I buy it? Because I think right now we're getting some pretty clear evidence that this housing market is looking pretty solid. Let me see. Do I like OPCO? This stock basically is, it has not yet given us confirmation that it's going to turn higher. And to me, that's really the problem. We need to look at this shorter-term chart. This is why I like to use things like the hourly moving averages. This stock has not given us any confirmation yet that it wants to go higher. What I think it will probably do is I think it will probably take a swipe down into this support area, probably go like down under these highs, get down into this range, maybe around like 1480, 1490, and then start working higher. But I think the way to see it, you will see that 100-hour moving average turn higher. I think it's still probably a month or so away before it's really time to buy this stock again. Is it okay to get Taser here? Taser is a small cap stock, and there seems to be a little bit of fatigue in the small caps here. There's bearish divergence on this chart. I don't think so. I mean, we were bullish on Taser back here when it held above the 10-day and then jacked higher. I think at this point, Taser is now a stock that has a huge amount of good news priced in. It's run like 50% since the beginning of April, and I think it's probably best to just cool your jets in this one. This is now stalling under the 10-day moving average, and I think it could easily go back to 32. All right. Am I still bearish on LNG? Well, yeah, I pretty much am. I mean, there was some news on Bloomberg yesterday that they were getting some kind of regulatory permit or something. It was something, it was a rumor and it wasn't even super clear. This stock to me is like, it's in this triangle, and I'm I don't know if I necessarily say I'm bearish, but I think it's really I think it has some risk at this point. Seems like there's a lot of good news priced into it, and it's expensive, and it's in a sector that is that is not doing great in terms of energy. So I know there's a lot of fundamentally good things about this company, but at this point in time, we have the 50-day moving average is about to cross down through the 200-day. I just think there's a lot of problems in a stock like this. It's pricing in nothing but good news. And I don't like the way it kind of rallied on that rumor yesterday and then died. So I think there's people who are shorting this stock betting they're not going to get the approval. So there probably will be people coming out to buy it. But I think at this point, I would basically let me actually look at this line. This is where I would like to see. I'd like to really see what happens down there. So at this point, I think you have a level up to 75, and I'd really see what happens between 70 and 75. BCS, which is Barclays. Wow. I don't know. It's just I don't know. I don't see much here. I mean, it's great that it's been going up. When you look at this, it probably just needs to pull back. I don't know why this stock is so good, but what I do like about it is the way the moving averages have now turned. But yeah, I think it's probably on a pullback that back down to probably around here. Back into this range, 16.7 or 16.8, that would be the place to look in a name like this. This is sort of company that's not going to move a whole amount, and I think you'd really want to see about using something like options in this would make a lot more sense to me. The liquidity is really not very good, so it looks to me like it's obviously bullish. But I think when you look at the long term, there is a lot of potential resistance from previous years that this thing is going to stall out at. So it's like, it could go to 18 and die. Anywhere around here, this could become resistance. So for me, I don't know. I don't think there's a great risk reward in this. Doesn't have great options liquidity, and I don't think it has a huge amount of upside either. The CLR puts. Yeah, I mean, this looks horrible. This is a weekly chart, but let's look on a daily chart. Oh my God, this looks terrible. Yeah, I think so. This looks like this is going to go lower. I think so. Yeah, this looks like it's going back under 40, if not closer to 35. Stalled under the 50-day, 200-day, everything about this. It keeps making lower lows and lower highs. Yeah, this is, in my opinion, pretty bearish. Hun looks like it's making a good base. Let's take a look at Huntsman. No, yeah, I agree, and I think I said that this was one that just was going to chop back and forth, and you wanted to wait for the 50-day to squeeze up against the 200-day, and I still think that. What do I think of Dish? Well, Dish kind of popped on some rumors and M&A stuff, and then it got stuffed back lower. I tried to buy the pullback to 72, and I got stopped out. So I think at this point, when you really look at this, you have a stock that stalled. This is a lower high than over here, and now it's breaking back under the 50 and 200-day. To me, this is going from being potentially bullish to potentially very bearish. This looks like this could, if this breaks this level, it's going to go through 66 in my opinion, and probably closer down to like 62. So I think this is now potentially a very bearish stock. I don't know if I'd want to be shorting it here per se, but this does not look good to me at all. It really had to hold 72 and it didn't. And at this point, I don't even see any support until it gets down to 66. And then when it gets to 66, then you're looking at a lower high, which means that the next move very well could be a lower low after that. GLNG, Golar. Now look, these companies are a little bit like drug stocks where they have regulatory things and stuff coming up, and I don't know what those are. This company looks to me a lot better than LNG. I'm not sure what the event was that caused this. I would tend to think at this point we just had the 50-day cross through the 200-day, which is a mirror image, the opposite of what's happening with Cheniere, where the 50-day is about to go down through the 200-day. So in this case, I think the stock looks like it has more upside. I know when you see these things gap higher like this, it looks precarious, but very often you just get more upside coming out of this sort of gap higher. So I think this is a bullish one. Why is Masco struggling? I really don't know. And that's actually something to me that's a little bit worrisome. This stock, it might just need to take one more dive down to its 50-day moving average and then bounce higher. Earnings are, I think, about a month away on this. The last earnings report wasn't all that great on this name, I remember. So this one might just struggle going into earnings. And, there are other companies in this space that have been doing well. And right now, I think it would make sense to go over in Research Lab and look. We had paper not that long ago in, what was it, USG just yesterday or 2 days ago. Mikey did an alert in USG. This stock now trying to break up through its 50-day moving average. It was strong today before the market got pushed lower. I think something like USG, this is a stock that is about to have that 50-day cross to the 200-day. It's gone nowhere for years. This, to me, is a company that might actually be in a better situation. So I think right now the weakness in Masco, kind of tells me something. They do cabinets and faucets and stuff like that. But a company like that, they don't always execute right. You can't just assume that they have a good marketing team right now. They might be dropping the ball. They might be losing market share to some other people. I mean, you go to the store, it's not like there's only one company that makes faucets. And there very well could be something negative happening in that space. So for me, I would look at where the strength has been right now. And to me, Masco is not getting it done. And I would not be surprised if Masco is going to actually have a little more weakness here. So this is making me a little bit wary in terms of Masco. It really should have moved on to new highs. And its weakness today when the home builders are up is not a good thing to me. TJX. TJX is actually on my list as a bullish stock, and I think this will continue higher in the very short term. It's weak with the market. I don't think this is something that you want to chase exactly at this level. It is pretty overbought if we look on the shorter term chart. But if this gets back closer to 67, I think it'll be a good opportunity, and I would be looking for that. Okay. Another thing that's interesting to me is Citi. Here's a stock that got downgraded today, and it's just kind of, if you look at this has clearly been trending higher. It's trying to make a higher low than where it was last Friday. Trades for under book value. To me, this sort of resistance line is not something that's really the end of the world. This is still trying to make a higher low. I think Citi here could be one that could do the best of all. It's under book value, like I said, and I think this is maybe an interesting pullback in Citi. Another thing that's interesting, which I own, is Pfizer. Pfizer trying to hold above its 50-day moving average here. This is one also that I think if you look at close above, if it goes back under the 50-day, it's a little bit bearish, but this is really a tight squeeze here. The 100-day coming up, the 50-day coming down, all these are tight together. This could be something now. It could just break to the downside, but, again, we're talking about a major large cap company. This is a sort of thing that, might be a good opportunity in terms of a stock like Pfizer. The option's relatively inexpensive as well. So to me, this is an interesting opportunity in Pfizer. Another one that's interesting that we've been watching for a long time is Merrimack Pharma. Now, this stock rallied a few days ago. I'm not sure why. I couldn't even find any news. But this is one that, if you look at it, it has had bullish paper in the past. It's been consolidating, and now it's trying to basically get back into gear. So I'm not sure what's going on with it, but it is interesting, and I want to just put it out there because, to me, this might actually get kind of interesting. Individual like biotechs, they've just been kind of, rotating strength between one to the other. The other one that is just a monster momentum stock at this point, which continues strong today, is Supernus. This one looks to me like this still has more upside to go. This is a very small company, and it's pretty inexpensive at this point. The other one that's interesting is Amgen, which looks like it's starting to come back to life. Now, it went above the 50 and pulled back, but if you look at this 160 level, I think there's a lot of kind of support here. Now the short-term momentum, the MACD, just moving higher. This is interesting. I mean, it might get back down closer to the 200-day. I'm not really sure, but I think it's interesting. And I think Amgen at this point, if you look at the way these big biotechs have traded, things like Gilead, it was just doing, nothing, 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 and then it got up. Look at when it went up and above. Then it held the 50-day and the 100-day, and then it took off. And if you look at something like Amgen, I think Amgen now might be getting into that situation. One of the longer-term trades we could be seeing here is the big biotech stocks, like Amgen, but also things like Biogen. These stocks had a nice jolt higher, and this could be the first of continued upside in this space. Vertex has also been coming to life recently. So all these are, to me, just kind of interesting, and I think that it is interesting to see the big biotechs, starting to show strength again, because we have really seen for the last few weeks a real outperformance in the small caps. But, as we go into earnings season, and, if Greece, at a certain point in time when the Greek thing, dissipates or whatever it's going to be, the large cap companies are more likely to come back to life. And I think when you look at something like what we've seen in something like Amgen here, it does look a little bit like Gilead did before Gilead took off. Okay. Does AT&T still have room to run? Had an upgrade yesterday. I don't really know what the catalysts are in this. I would say yes in the long term. In the near term, no. The reason is when you have large cap stocks like this that just have this really tight consolidation and then they break and they start moving, they tend to continue higher. We just now are having the 50-day cross to the 200-day. This stock has done nothing for years. And I think if it does wake up, it could go on a nice run. It could go to like 50 by the time it's done. So yes, I do think that the AT&T has more upside. In the next week or two, to me, this would make sense to be looking for a pullback closer to 35 and then look at it as a long-term entry. I think the person who asked about Dish wanted to ask about DTV. This also has broken out and started to run. I think it continues higher. This looks perfect. It had a long consolidation. Now it's moving higher. I think any kind of shallow pullback, I think you'll get 92, something close to 92 again, and then it will also continue higher. Okay. Those are most of the questions I have. And those are most of the other things that popped up. Unfortunately, it looks like we're not going to get Jeff with us, and I do apologize for that. Interesting, one or two other things I want to mention. One of them is that, so Carl Icahn came out and said he sees a pullback in the S&P, thinks the junk bond market is overheated. Carl Icahn's a great guy, and he's smart. I personally don't agree about the junk bond market, and the thing I'll say is that, and I haven't covered the credit market, it follows the economy, and I think we're going to see an improvement in the economy. I don't think it makes sense to buy junk bonds now, but I don't think we're at a point where we're going to see a collapse in them either. A lot of people, they'll look at something in the credit market and they'll say, oh my God, there's something happening and blah, blah, blah. But they forget the point is that if you want to get a sell-off, you have to have both a credit crisis and an economic slowdown or recession. So if you look in 2008, before the mortgage crisis, the U.S. economy was already in it was beginning a recession. We had negative, payrolls for 6 or 8 months before the financial crisis hit. We have just the opposite now. So I think when you really look at it, the bond market is not going to be something that's going to cause a huge crisis, in my opinion. Now, if you also look, if there's anything that's going to cause a crisis, it's going to be something like the Fed raising rates or the Fed not raising rates. That would be the greater problem in my book. But, I remember, and no one remembers this because it didn't happen. Back in 2003, everyone thought that when GM and Ford got downgraded to junk, that the whole market was going to collapse. And instead, it was a hiccup for about 3 weeks. That's when I covered, origination. That was 2005. I think it was 2005. They both got downgraded to junk on the same day, I think the 5th of May, and they were joking about the Cinco de Mayo. But the thing is, that was at a point when the economy was expanding, and it was basically brushed off and forgotten. So I think right now, something like junk bonds, they could be weak. Is that going to drag down the overall market? this market is not being pulled up on a credit bubble. It's just the opposite at this point in time. So, to me, I think to me, I'm. This is not something I really see as a big issue here. I do think that we have at this point. There's a lot of support here in the S&P. When you look at this, you know, there's nothing technically here that has told me yet that we're really heading for a big collapse. This is slightly lower high here, but we need to see lower lows, and we haven't seen one yet. The low we made this month is higher than the May low. Each month we make higher lows along the 100-day moving average. So to me here, I do think something like a push closer down to 2100 is entirely possible. But right now I'm looking at the fact that the S&P is trying to hold its 50-day moving average, and we're heading into a lot of economic data next week and stuff. I think we could push a little bit lower, but to me right now this is getting near a level where there's going to be some significant support. So that's what I think about that. The other thing is, well, the GDP was revised in line. We don't even really care about this GDP. It was a revision of a report that was already being considered, not very credible. So those are the main things I have now. I think the bigger thing to me also I want to point out is, Apple is strong, and this says something. It says the bigger cap is interesting. You see it kind of pushing up and stalling here. I'm not even really a big fan of Apple, as I've said, but to me it says something, and that is, if you look, it's the bigger cap things that are doing well, and I think that right now, that's going to be a theme that's going to continue. I think there's going to be people buying big cap stocks going into earnings season and stuff like that. So could be a little more weakness in the near term, but I think those are the places we want to be looking. What happened to CSX? Is it a buy on this pullback? Well, CSX had been looking really good, but it's now just breaking down everything it was supposed to have held. Something is really wrong with the railroads here. We might see a lot more weakness in the coal sector. So to me, this is something now that we have to just this is not good in terms of the railroads. I would now basically have jettisoned that idea. I liked it down here when it held the 200-day. It moved slightly higher, and now it's just getting killed. So I think right now the rails continue to be a very treacherous place. It's all about coal. United Healthcare, UNH. I think it gets down closer to the bottom of this triangle, but I think UNH is probably going to be a good buy here. I think a lot of these stocks are going to continue to have opportunities. This is one that I keep looking at as a potential takeover candidate. Molina Healthcare, CNC, these are some that have been kind of interesting. I think UNH, when it gets closer to the bottom of the triangle, this is going to be a good opportunity. This is a bullish triangle. It looks like it's getting ready to break out and continue higher. This company, last time I checked, they don't have Greek exposure. The HMO business is a totally domestic business. It's a secular growth story, and it's an M&A story. It's in a great part of the economy right now. I just think it goes a little bit lower, and it'll be a good opportunity when it gets down to, say, 118, 119. Now we have Paper and Thermo Fisher, TMO. This is one I recently pointed out that was pushing against the 50-day moving average, also in a very tight range. Today in TMO, they are buying the 130 calls in July. Looks like earnings are going to be, let's see, July 130 calls around almost 7,000 bought. Earnings in this one are July 22nd, which is after expiration. So they're just looking for this thing to break and rip higher. Pretty interesting. These healthcare names continue to have activity. Take a look at this. Look at this triangle. So they're looking for a breakout to the upside. I think the last earnings report on this was kind of weak. I think they had a warning because I've been looking at this stock against the 50-day moving average here for a while. It's interesting to see this stock pushing the 50-day. See Pfizer pushing the 50-day. To see Realogy pushing the 50-day. All of those are stocks that make a lot of sense, especially, regardless of what happens in Greece, especially something like a Realogy. Okay. Do I like the 60-65 call spread in July on Lynette LCI? No, at this point for me, Lynette could easily pause. I don't really know what to think of it. I mean, I did definitely like it when it was down under 60, and we were talking about it in the mid-50s. At this point, it's run up pretty good. It has this falling 50-day moving average. It's a relatively small cap company. So to me, this stock, if anything, has the this is looking a little tired. I don't think it makes a lot of sense to be putting new money into this at this time. Those are the questions I have. So thank you very much, folks. We will be back on Monday. I'm going out to San Diego for Invest Like a Monster. I hope to meet some of you there. And if you guys are there, please come up and introduce yourself. I will be speaking about an hour and a half after the market closes on Friday, and then we'll be back on Monday. So I hope everyone has a great and profitable end of the trading day and a restful weekend. And if you have a good trip, if you do come out, and I can see you. Take care, folks. We'll be back next week. Take care.